Welcome to your daily 5 minutes market brief with JP Morgan and Luna. Today is July 21st, 2025. I am Luna.
I am JP Morgan. We're pulling out the crucial insights from your sources.
Yeah, it's interesting. U.S. markets seemed surprisingly, flat yesterday. But, beneath that calm, there are three key stories really bubbling up. They signal some pretty significant currents that we need to pay attention to.
Okay, let's quickly set that stage then. U.S. equities, minimal change really. S&P 500, Nasdaq, basically flat. The Dow dipped just a tiny bit. And traders seemed to shrug off those first reports about new EU tariffs pretty fast, didn't they?
They did. The market recovered quickly. But we did see some mixed performance sector-wise, like Netflix, its stock fell 5%, even with some upbeat forecasts out there. Kind of odd. But on the other hand, you had crypto-linked stocks getting a bit of a boost. Looks like that was from some pro-crypto legislation moving forward. And the safe havens, gold, Bitcoin, they held steady.
So a cautious picture then. Digesting conflicting signals.
Exactly. A market sort of waiting, watching.
Okay, let's dive into the core drivers. This is where it gets really interesting. The Federal Reserve. They announced an emergency closed board meeting for today, July 21st, 11:30 ET. The purpose is to review and determine the discount rate charged to banks. An unscheduled meeting that always gets attention. Signals urgency.
Absolutely. And what's fascinating here is the discount rate itself. Any change there, it could immediately hit bank funding costs.
Yeah.
And then, ripple right through credit conditions.
So an increase means tighter money.
Yeah, tighter liquidity. A cut, though, might signal they're worried about the economy. The big question is why the urgency? Why right now? Everyone's watching for that decision.
Definitely want to watch.
Okay.
Okay, but that's not all that's adding to the uncertainty. We got reports just in the early hours of July 21st, maybe 12 hours ago now. The White House is threatening a 15-20% baseline tariff on all EU goods and potentially escalating that up to 100% on things like pharmaceuticals. That sounds aggressive.
It's very aggressive. If that actually happens, these across-the-board tariffs, they'd almost certainly push up import costs, consumer prices too. That fuels inflation, disrupts supply chains. Think about autos, aerospace, pharma. Those sectors could really suffer.
And markets are reacting already.
Oh, yes. Global markets are taking these threats seriously. It underscores the potential impact. It's significant.
Okay, so Fed meeting, trade threats. And number 3, this persistent kind of extraordinary political rumor. President Trump possibly trying to oust Fed Chair Jerome Powell. It really heated up over the weekend, didn't it?
It did. Bloomberg reported Sunday the White House is likely potentially moving on Powell's removal soon, and just the idea of the Fed's independence being compromised.
Cool.
Well, we saw it have a noticeable, if brief, effect on markets last week.
Right.
Experts are warning that an actual firing could spark a, quote, cataclysmic shock. Investors might start demanding higher risk premia across U.S. assets.
So higher borrowing costs, more uncertainty.
Exactly. It raises a really important question about, the stability of monetary policy going forward.
So, putting it all together, what does this convergence mean for you, our listener, for your strategy?
Well, with these three big wild cards, the Fed meeting, the trade threats, the Powell rumor sentiment is definitely turning cautious. You can feel it. Volatility risks, they're certainly elevated, could spike.
So for your own approach, it sounds like staying diversified, avoiding too much leverage. That's probably wise right now.
Absolutely. And this environment really highlights something important. Policy news coming out of Washington, D.C. is, right now, just as crucial as what happens on Wall Street, maybe even more so.
It feels like D.C. policy pronouncements are becoming primary market drivers, sometimes overshadowing the usual economic numbers.
That's a good way to put it. Vigilance and staying informed, especially on these political and economic narratives, it's essential.
Okay, we have truly done a deep dive today into a complex landscape. So here's our provocative thought for you to consider. How much do these political headlines really sway the long-term fundamentals? And maybe more importantly, when does that political risk stop being just noise and become the main thing driving the markets? Something to think about as these stories continue to unfold. Thanks for joining us for this deep dive.
Enjoy the brief? Please like and subscribe. From equities and bonds to global risk sentiment, we deliver day's key market moves, macro trends, and institutional flows in just 5 minutes. Live stream coming soon. Stay tuned.